it's too convenient to say that these are all low-income jobs. I don't think that's necessarily true. And I think that it then starts to introduce a whole bunch of other constraints to the system. These are folks that then need healthcare. These are folks that need childcare. These are folks that need, that they are also a tax on resources as well, right? We are all taxed on the natural resources and the infrastructure of our country. And so, I don't think that that's the solution necessarily to that specific problem.
But what if the jobs that were, the people who are coming in...
We have enough people here to do the work.
But they won't do it.
What we don't have is the market clearing price for that work to get done. And so what I'm just trying to say is I think that the simpler and more obvious solution is to raise salaries until you get people to fill these jobs. And I think that it's happening. And so I do think that over the next year or 2 or 3, you're going to see, labor rates basically go back up and employment rates go back down and salaries go back up and inflation go back up. All of these things are going to happen together. That's the solution. I think immigration is a solution to a completely different problem. Which is that we're not competitive. Like I really
so you're talking about bringing in elite, highly educated, technical people.
Look, I really think that running a country should really be like running a sports team, and
recruit the best talent. Period.
And you should really be recruiting the best talent. You should be looking at game film. You should be coming up with plays. You should be running and testing those plays. You should have different plays that you run in the first quarter versus the fourth quarter, different plays when you're on the goal line.
Sure.
And I think that like when you look at professional sports, one thing is that they don't see color, gender, sexual orientation. They see ability to be performant.
Statistics.
At a task and statistical excellence.
Yeah.
And then they go seek statistical excellence. And if you translate that to a country, my simple rubric on immigration is every year there's a draft, and America is the free place every free agent wants to go.
We're the Yankees. Yeah, we're the Warriors. Yeah.
Fuck the Yankees. We're like the Warriors. Okay, Yankees are trash. Jesus Christ.
I'm just going with who historically has won the most.
We're the New England Patriots. Okay.
Cheaters.
We're the Chicago Bulls. We're the, we are the team that everybody would want to play for. It's up to us to have a good GM posting on TikTok or whatever. It's just a completely different reimagination of like labor and time spent. And that's just a very small example. And so that maybe touches retail or maybe touches, quick service restaurants. But there's all these different things where now that at the end of this pandemic, people are making very different decisions about their time and how to spend their money. And again, I'll tell you again, there's a lot of people. You got to remember how many people in the United States have died or are dealing now with some reasonably important health issues at the back end of coronavirus. 500,000 people, 1 million people. I want you to keep in mind what I told you guys before. There is $70 trillion that has to get transferred down from all these baby boomers down to these people in their 20s, 30s, and 40s. And don't think for a second that they're not making different optimization decisions around perceived wealth. So I just think inflation is here. I think the labor shortage is going to get worse, not better. I think we're going to have to pay people more to get out of it. I think prices are going up. Input costs are going up. Energy costs are going up. So
we should also remember that there are going to be some responses from...
Sorry, Freeberg, last thing. Tech stocks in the fucking toilet.
Why?
Because
no bueno
of multiples?
Because no bueno, no bueno for no cash flow growth stocks. Bleh.
Yeah.
In rising rate
everyone's going to start buying yield when...
Yucky poops. Nobody wants it. Yeah. Yucky poops.
Well, wait, let's explain this to the audience. Why Freeberg? Why are you agreeing with Chamath?
I mean, once interest rates go up, you'll see that dividend yields will go up, which means stock prices go down because people will expect a higher return. Because if I can buy treasury bonds and make a few points of return on my money, and I'm going to have to buy a stock, I'm going to demand a few more points of dividend yield on that stock. So the price the price for stocks will typically go down to match the yield that you're going to get from these more risk-free investments.
No. To be more precise. A stock is either a promissory note about cash today or effectively a promissory note about cash in the future. The thing with tech stocks is we tell everybody the same thing. Your money is going to come 30 years from now because we're going to be a monopoly by then. And every dollar that I have today, I'm going to reinvest into R&D and engineering. And in an environment where interest rates are zero, you're happy to do it because you're like, well, great. These guys are investing at way better rates than zero, which is what I get from my bank. And so I want Facebook and Google and Amazon and all these startups to be putting all this money in the ground on my behalf. But when interest rates start going up, they say, no, hold on a second. I need more money up front, less money in the future because the future becomes more uncertain. And that's the big trade-off for tech companies, where they get really pummeled.
So there's Chamath on the labour shortage and how he believes that loosening immigration policy and raising salaries are potential answers. Do you agree? Do you think raising wages will help? Let me know in the comments. Now, one thing is for certain, this tsunami of workers leaving their jobs and the labour crisis is for sure going to increase inflation. Businesses will have to raise prices to keep up with increased labour costs, and these costs will be passed on to consumers. However, Chamath went on to explain why he believes inflation isn't necessarily a bad thing.
Listen, inflation is a good thing. I know people think it's like a really bad, terrible thing. There are certain kinds of inflation that are really productive. We have had to find a way to fight the bad parts of technology. Technology is great. 9 out of 10 things, it's amazing. Efficiency, all these great characteristics that it gives you. But one crappy externality of technology is that it's deflationary. You can do more with less. And that's fundamentally not great for earnings. It's not great for labor participation. It's not great for all these things that people, are really upset about today. So
it's great for the individual company getting those gains.
I actually think it's kind of like it actually balances out the natural pace of technology, which is like you have the natural ability to just actually have cheaper, faster, better, this inherent efficiency that's building up on one side of the ledger. But then what's great is on the other side of the ledger, you actually have labor being able to balance it out. And I think that that's a really good thing because they can demand more to do the rest of the work that's not covered by tech. Look, I'm just going to, I said this on CNBC, I'll just say it again. I think it's coming. I don't think it's a short-term blip. And I think that we are in a period that will resemble the late 70s. And I think that, you kind of want to be risk off and not own risk assets. And by the way, it is hard, okay? Because like we are all of us, all four of us, we're both risk on, and all we own are risk assets that are, it's one thing to say, let's take risk, but you could take risk in like lower of all things. This is like taking risk in the most risky thing. That's what we all do.
And at a time when people have run up the valuations of private market companies to a level that just nobody can understand.
I mean, look, I think you got a year to 18 months to kind of clean this stuff up, meaning like as market participants, we can shuck and jive and get everything into a decent place, but it's coming. And I hope I'm wrong, but I think we'll look back on this and we'll say we said it probably 8 to 12 months before it really reared its ugly head, but it's coming. By the way, central bankers around the world have raised rates. The only place that hasn't gone up is Europe, ECB, and the United States, the Federal Reserve. So, and let's be honest, Europe and the United States, we absorb labor and materials from all around the world, right? We are the net importers. We are the net ultimate buyers of last resort of all of these things. And so if you're seeing inflation in those other, supply-driven economies, they are going to come on shore. They're going to hit us in the face. I think prices are going up.